Welcome to UpsideDownRealEstate.com. My name is John. I'm a real estate broker and attorney, and I'm going to try to anticipate some of your questions, and I'm going to talk to you a little bit about our process. So your first question might be, there's lots of people claiming to be loan workout experts or know your options experts, and most of them are realtors. What are my options, and who should I trust? Well, I can tell you this. If you're going to work with a realtor, you're thinking they're your loan workout option, make them send you the short sale listing addendum, where the California Association of Realtors does explain, and I've got videos that'll be up on my site going through that. They explain what your options are, and it's very good. I mean, my website was explaining them back in 2007 or 8, probably before their short sale listing addendum. In fact, I'm pretty sure it was. But their options are accurate, or they cover the vast majority of them, and in a way that I would cover them too. So don't talk to your realtor about your options. Have them send you the form, because the form explains to you that they're not allowed to talk to you about your options. They're not allowed to talk to you about credit and tax advice, and they're not allowed to talk to you, even tell you which options to pick. That's what the lawyers are telling you, and they make you sign that form so you're aware. And it's very important to know. Like, for most people right now in the beginning of the market, short sales may not be their best option. If you're, and I know, and because I'm going to anticipate your question, I remember many people in the beginning of the market were quite concerned about damaging their credit, and they didn't want to have to wait 7 years after a foreclosure to get a property. And people were telling them short sales are much better for their credit. Well, it turned out in the beginning they were, but in the end they weren't. Many people in the beginning could buy homes after 2 years. Some of our clients could. They call us up and say, this is amazing. But towards the end, people who took short sales, many banks were treating them similarly to taking foreclosures. So your goal at the beginning of this is, if you think you might want to buy a house again in the future, your goal would to do better than a short sale with respect to your credit. And if you leverage California law right now in the beginning of this market, based on my experience in the beginning of the last market, you can. For me, the very first thing I would talk to my client, first, we're going to go over your loans. We're going to determine if they're recourse or non-recourse loans. I suspect many of you, if you're like me, would have a purchase money first. And even if you didn't take any money out on your refi, because the way mortgage brokers do things, the amount you owe is going to go up a little bit. That's how they got those loans done. So let's say you started $1 million, you paid it down to $900. When your mortgage guy does your refinance down at 2.5% or 3%, they probably took a little bit of money out. So maybe you jump from 900 to 910 or 920. So you're going to have a component of non-recourse loan and recourse loan, even though it's only one loan. And that could affect how you're going to work out, do your workouts. It definitely could affect cancellation of debt income. So I wouldn't say you'd want to take a foreclosure, but I wouldn't. Well, we look at your options. So many variables run through my head. I don't want to spin off on a tangent. So the first thing is we do a non-recourse recourse analysis. Now, in the past, UpsideDownRealEstate.com, at one point, that was just part of a loan workout package that were, some of them were $997, some were $1,500, and some were $3,000, like a short payoff. Right now, I'm providing them free. I think it's a little easier. I know people are going to go and ask AI, and I'm going to say AI is good on that first round, that first question, but do not let them do your options. I've been trying to help, write things better on my website and do research, and like I said, they sometimes don't even give you the whole law. Like, you're saying, I want to know about fraud in 580E, and I want to just explain it. So can you give me the whole statute? And it won't give me the whole statute. It won't include the part where it says, watch out for fraud. If there's fraud, the bank can still go after you for damages. And I asked it like 2 or 3 different times because I was going to write an article and do a video about it, and it wouldn't give it to me. So it's like, it's really good if there's a lot of good information already on the net about it. It's not so good if it's got to think and extrapolate. So I in a way, I'm concerned, and I'm saying, just talk to a lawyer. And if you want, it can be me. Just for me, I'm going to ask you to fill out a form, either online or we'll email it to you. You fill it out. I'll review it. So I'll either come up with some more questions, or I'll be able to satisfy, for the purposes of our interview, whether you have a recourse loan or a hybrid or a purchase money loan. And then we're going to set your options. And we're going to look at it from a liability of the bank, so the deficiency standpoint. Can they come after you for the money after a short sale, after a deed in lieu, after a foreclosure? Same thing with taxes. What are you going to go cancellation of debt income, which would be as if you had a job if you're not insolvent, or might it be, do we have to do a capital gains analysis? We're going to do that with respect to your loans and the process, because we'll know how a foreclosure is going to impact you, but the deed in lieu is going to be up for negotiations if you have a recourse loan. And if you have a recourse second loan with a short sale, we're not going to do a short sale right away if you can afford not to, because you don't want to be a sold out junior. So you don't want to stop paying on your first. So there's the process. We want to figure out deficiency, taxes, credit. We want to do it across your loans and across the loan workout options, and we'll spend more on the ones you're interested in. And I will also volunteer things. So like if you're saying in the beginning of this process, you're concerned about your credit, I'd say, well, then let's not go negative. Let's not go into default. Let's keep your loans paid while instead of like doing a short sale with low equity or forcing yourself into a short situation with high realtor fees, let's skip that process altogether and consider a deed in lieu. And I'll talk to you about what I would charge, but I'll tell you what I would do in my deed in lieu. If you want to avoid damaging your credit and do it yourself, I'll tell you what to watch out for. I'm pretty sure you'll see the value of an attorney leveraging the law and getting out of the loss mitigation department into the legal department, or even finding out who the investors are and saying your loss mitigators may be violating their duties because they're not taking this property back now. And if you take it back in the future, there's going to be a lot of waste. And I'm not saying you're going to remove the pipes. I'm going to say they're not going to get paid for a year. And then there might be tenants in there, and they might have to do an unlawful detainer. And then they're going to have to run into all these expenses. And we're going to compare that result, which I would help you achieve as your lawyer, which would be longer than if you just tried to do it on your own. You'll have more time in the property or more time to rent with a lawyer than you could on your own. And we'll explain all that to your lender. And maybe we'll get the deed in lieu done right now. And if they don't, I would still say, look, unless you're really trying to move on with your life right now, is it advantageous for you to do a short sale now, or is it advantageous to do it at the right time? We'll talk about what the right time is and the fact that you might get to stay in the property and not pay the bank, or maybe you won't even pay your property taxes. HOAs are another story, but if you're going to lose the property, why would you be paying your property taxes? That's what you'll ask me. Like, what are my risks? I'll explain why you might or why you might not. I would have a tendency to not pay the property taxes if I'm going to lose the property anyway, but we'll talk about the risks. So anyway, that's the point. My name is John McConnell. I'm a broker and attorney. I've got a lot of experience. Fill out that form, and we will call you to set up an appointment with me. I'll member my team, or if I'm here and I'm not in the middle of something and I see the form come in, I might try to call you right then. But normally I would expect my office, or you'll get a text saying what's a good time, and we'll try to do it. When I see them, I like to act, so I'm not going to put you off for a week if I don't have to. My name is John McConnell. I look forward to talking to you. Thanks.